Hey guys, what's up? Spenny here. So in today's video, I'm going to show you why I think the stock market is going to have a pretty harsh correction in the next 3 months and possibly even a market crash. However, I'm leaning towards correction territory, and so I'm going to show you the evidence that I have. I'm also going to show you guys history on what often occurs after a huge market crash that we've recently had. I'm going to show you the 2008 crash, the 2000 crash, show you guys how much the stock market rebounds, and then what happens after that first year, the territory we're running into right now. I'm also going to show you guys the stocks that are most at risk and the stocks that are safer but are likely going to drop over time as well. So if you guys want to see more content like this, make sure to subscribe to this channel and make sure to drop this video a big thumbs up if you find it informative. Okay, now I want to show you guys the chart and what's happened over the past year. So in the past year, we've gained about 113% on the NASDAQ. Now, this isn't completely abnormal to see after a pretty harsh crash in the stock market. However, the next year after this is where things are going to change. We can't expect another 100% return over the next year. And if we go back to the last crash in 2008, we can see it was pretty similar. If we chart it here, we gained in just 1 year time about 100%, so very similar. But what you can also see, after that 100% gain in about a year's time, we saw a breather, we saw a correction. And if we chart that correction, I think it was about 20%, yeah, 18 to 20% correction. Now it's very healthy and it was very needed back then. Now after that correction, if you would have bought, I think it was about a 40% gain over the next couple of years. Yeah, about 40%. So it corrected and then went on another run. And then obviously it corrected and then went on another run. Now I believe we're going to see something very similar coming up very soon. You can look at this chart, guys. Like, if you actually look at it, this thing is straight up. This is not healthy and this is not a safe time to buy, sadly. We have seen 110% return in the last year. We've now formed a double top pattern, and we are likely to see a 20% correction, maybe even more, depending on how scared people are of inflation. And inflation is really going to take off the next few months. So I'm looking at this as a risk versus reward situation. I don't see much of any reward in the next few months, looking at history, looking at the macro environment of inflation picking up, seeing how the market is scared of inflation and that's only going to get worse. I don't see much reason to be heavily invested in the market right now. I've actually sold all of my call options. I made a 77% return in the last 2 months, and I've taken those profits. Now I also want to show you guys the two trend lines that I have drawn here. So the top trend line here is likely going to be a correction territory. If we are going to correct, it's very possible we're going to correct to this trend line. From the top to this trend line is about 15% to 20%, depending on the time frame of the correction that's coming. Now I think it's coming in the next 3 months, and if we go to August, that's about an 18% correction. Now I can't say for sure, if this is going to happen in 2 weeks, 1 month, but I do strongly believe this is going to happen in the next couple of months, guys. Now, that is a best case scenario in my opinion, about a 15 to 20% correction, and then we see a continuing uptrend. Worst case scenario, I think from top to bottom, we could see a 40% crash. That's no longer correction territory. That's actually a crash. This is possible depending on inflation. If inflation is not transitory, if it's way worse than everybody expects, very possible we go back to this long-term trend line, and it started really back in 2008. Then this is actually a lot more healthy if this is the trajectory of the stock market. This trend line right here is pretty unhealthy. That is a very steep incline, and it's just not very sustainable. And especially the past year. The trend over the past year, I mean, this is ridiculous. It was literally straight up. Now it's broadening out, and it's likely just going to correct. So that's what I'm seeing on the chart. Now, over this past year, I've already shown you guys this before. This is our margin debt. Our margin debt has expanded massively. It's gone from about, the mid 500 billions to 822 billion in March. I'm really curious to see what the April data is going to be, and this should come out May 21st. We should get that data. very important data to keep an eye on, and I will make a video on that on May 21st. So definitely stick around if you guys want to see that in the future. Another thing I want to show you guys is just inflation. So I've shown you this before. Inflation was a lot higher than what people expected. It was at 4.2%, and we saw the market react pretty poorly to this information. Now, this is just going to get worse, in my opinion, and I actually don't think that inflation is going to be completely transitory. And if we just look at the history of inflation dating back to the 70s, it usually isn't transitory. We see an explosion up in inflation, and then it comes back down, but it never comes back down to the normal. It might settle in between the highs and the lows. So something to keep in mind. I do think people are going to be unexpectedly surprised on how bad inflation could get. And their forecast is 4.7% for June 10th, you can see here. Now, 4.7% is really high inflation. However, last time, they had a 3.6% estimate. It came in at 4.2%. And I think that we're going to beat this again. I'm definitely going to keep an eye on inflation. I think we're going to beat this. And I think the stock market, again, is going to react very bad to it. The last few months, I made a really smart decision. I transitioned from the high growth stocks, the really speculative stocks, into stocks like Molson Coors. And that's how I managed to gain 77% in just 2 months using call options. That was a great trade then, and I am still in Molson Coors as far as stocks. I actually have a lot of money still in them, and I want to re-enter into Molson Coors with options very soon after this market correction that I'm anticipating. I want to go super heavy in Molson Coors because I think it's going to be one of the best plays in the future here. But something that has happened over the past few months, and this is very common when a correction or even a crash is imminent, is that the weak stocks go first. So over the past few months, something like a QuantumScape, this is a stock that exploded the past year, doesn't have any profits, super speculative, and now it's crashed about 80%. Now, these are the first stocks that are going to go. Those super speculative stocks are not going to survive inflation fears. They go first. Another example is a Virgin Galactic. This is a stock that has crashed massively. Now, I realize there's more than one reason why this stock has crashed. Inflation and macro environment is not being friendly to it, though. Trust me. The next stocks that are going to go, though, is something like an Airbnb. So an Airbnb is a great company, makes a lot of revenue, and it's really a unicorn of a company. However, its valuation is extremely steep, and these are the next set of stocks that are not going to do well in a high inflationary environment. From the peak of Airbnb to where we are now, we lost 34%. So this kind of basket of stocks is going to do poorly over the next month, in my opinion, at least when that next inflation data is released. I don't know what's going to happen between now and the next inflation data release. This could go up, but when it is released, I think the Airbnb and many stocks in the same category are going to drop with it. And then lastly, the last stocks that are going to drag down the broader indexes is when your consumer staple stocks go. Right now, consumer staple stocks are that safe haven. Everybody has been fleeing to them since January. Eventually, these are going to get pumped up just like commodities have, and they're no longer going to be seen as a safe haven because their valuations are very rich and everything's already going to be baked into the share price. When that happens and when more inflation data comes out, these are eventually going to drop too, and is going to drag down the broader indexes. Now, this could happen over the next 2 months, 3 months, 4 months. I don't know exactly when it will occur, but in my opinion, this is pretty much inevitable, and history shows us after a run like this, you definitely got to breathe at some point. And so right now, I'm just not seeing a very good risk versus reward in the stock market. And I've made a ton of profits in the last 2 months. So for me, I decided to take those profits, and I'm going to be waiting on the sidelines now. Really, there's no reason for me to feel panicky about getting into the market. Even if the market goes up higher, I don't see how it could go up, another 100% or 50%. I just see that risk versus reward really not being favorable in a position that I'm currently in. Now, everybody's in a different position. This is just what I'm doing. This might not be what's right for you to do. And also, I do want to mention, I have shares in the stock market still. I just don't have call options. But all the trade opportunities that I've mentioned in my past videos, I still strongly believe in. and I will be getting back into those, probably even more heavy than I was in the past, once we see a breather in the stock market. So anyways, guys, that's all I have for today's video. If you got any value out of it, make sure to drop this video a big thumbs up, and feel free to subscribe if you want to see more content like this, and I'll see you guys on the next video.
Oh.